So basically, we're going to talk a little bit about what Cryptex is, what we're building, where we're going, the lessons that we've learned from the things that we've built, and how we plan to continue our growth in the future as a DAO. So to start off, Cryptex is a decentralized autonomous organization that develops and deploys a wide range of index solutions. We started our journey with a total crypto market cap index token, so it's essentially an over-collateralized vault system paired with a Chainlink oracle that provides synthetic exposure to the entire crypto market cap in a single solution. So when you look at DeFi and you look at where we're going as an industry, there's definitely going to be a lot of room to have your BlackRocks, your Vanguards, your S&Ps, all your different index builders in the TradFi space that come into the DeFi space and essentially do the same thing. So Cryptex wants to be a leading builder of that. So we started with total crypto market cap in 2021. We went on to build decentralized perpetuals. These systems are powered by Chainlink. We also offer 12 fully decentralized perpetual markets that are built on perennial finance infrastructure powered by Pyth, and current deployments are on the Ethereum and the Arbitrum L2. Well, looks like I'm losing my thing, but it's all right. So with TCAP V1, which was a total crypto market cap token, the original system was built on Ethereum. It had over 200 million in mints and burns, and the V1 system of TCAP functioned as intended, but essentially we learned a couple of different things with building it. The system was over-collateralized, so there was a lot of friction with actively managing over-collateralized assets with variable pegs, and we needed to increase the capital efficiency of an over-collateralized system to essentially protect the system itself. So obviously what we're doing with these systems is building them fully decentralized. There are no middlemen, there are no intermediaries. It's fully decentralized tech. So essentially you have to find a way where you can protect these systems. So TCAP V1, we learned a lot of really cool lessons. Seeing 200 million in mints and burns was very impressive, but essentially we wanted to go out and do some different things. So what we did was we essentially moved to the Arbitrum network, and by moving to the Arbitrum network, we were able to build fully decentralized perpetual markets. These markets, TCAP is now perpetual. It is powered by Chainlink. It provides up to 100x leverage for exposure to the entire crypto market cap in a single solution. We also have 12 individual markets live: Bitcoin, ETH, Solana, Bitcoin Squared, which is a really cool option market, Ethereum Squared, Arbitrum, Jupiter, etc. The system currently has 13 million of available system liquidity. Users can trade essentially anywhere in the world. They can access these different systems, and really, really happy with Pi. We launched it on November 28th. It's done really cool, and shout out to Perennial, who provided a wonderful infrastructure for us to build these markets on top of. The DAO will be building new and exciting perpetual markets that will be launching on the Arbitrum network, and these were kind of based on our learnings from L1s. So basically what happened was, as we learned different things in TCAP, we kind of took that knowledge and now built out different perpetual markets that you don't have any slippage. There's no risk of any type of issues or friction from the peg. It's literally instantaneous settlement, and you're able to use USDC, swap into any of these markets, have up to 100x leverage within the system, and trade them accordingly. So essentially now we kind of want to talk about where we're going. And I'm glad my little clicker is working now, because now we're getting into the really important stuff. So we feel that L2s are going to be a multi-trillion-dollar opportunity. And when you look at the current centralized exchange volumes, like, this is really, really cool for us. So you look at the volumes on centralized spot markets, and what you're seeing is about $4 trillion last month of trades that were facilitated. When you look at the DEX volumes, that number is only $36 billion. And you look at the total TVL that these L2s are capturing, you're talking $28 billion. So between 4 trillion and 36 billion, there's a lot of possible upside that can take place within the DEXs and the L2 ecosystems. So as we're building out decentralized indexes, we kind of feel that that market's still incredibly undersaturated, right? Because there's not much there yet of people that are building decentralized indexes, so it's kind of a place that we want to be. So looking at the L2 landscape, we feel that this has multiples of expansion that are potentially able to take place if these L2s continue growing and users continue bringing assets on chain. So now, we know this, and we know, what the fees are to facilitate these transactions, right? So when you look at where Base is, where OP mainnet is, these cost a fraction of a penny to essentially transact, and the speeds now are in lightning speed, essentially versus Ethereum, where for a Uniswap swap, you're paying roughly $6, and for a USDC transfer, you're paying $2.44. So essentially, you do the same exact transaction on Arbitrum or Base at a fraction of a penny. So what did we learn from this? We learned that L2 networks are experiencing growth. More users are going there, and they'll continue to grow there as they essentially find out that it costs pennies to trade. The TVL and the L2 network volumes and transactions per second continue to indicate potential for growth versus their centralized counterparts, and an opportunity exists in DeFi to create unique indexes, indices, and custom markets for users of these networks. So not just coming out with an individual token, but coming out with an index or a basket of assets where users have the ability to access those if they wish to do so, and doing everything fully on-chain, fully open source, and fully transparent. So now that we know that the spot volumes are where they are on CEXs versus DEXs, we know what the transaction costs, what's the solution, and essentially what are you going to create to facilitate that. So today we're going to introduce Cryptexes. And what Cryptexes are going to be are index-based tokens that are deployed to the base L2 network. They're going to be actively rebalanced by a manager. The LPs are going to have the ability to convert ETH or USDC into index tokens directly via a DEX. They're going to be capital efficient. Users cannot be liquidated. And the index token is essentially going to track a basket. So you're going to have an AI index. You're going to have a meme coin index. You're going to have total market indexes, whether it's a 3, 10, or 20, and many more indexes to follow that are voted by the Cryptex DAO. So essentially, the DAO is going to decide where they want to see the development from contributors in creating these indexes, and we're going to deploy them on Base, where you have Coinbase looking to bring the next billion users on-chain through their Base L2. So it's a super cool moment for us. It goes from our humble beginnings of building an over-collateralized total crypto market cap token on the Ethereum network, to building decentralized perpetual markets on the Arbitrum network, and now kind of going full circle back to one-to-one backed index baskets on the Base network. So looking forward to getting these live. The deployment will be in Q2, and essentially we think that there's, based on the data, a ton of opportunity to get these live and really make something magic happen. So with that, as Cryptex is a DAO, I want to talk a little bit about what CTX is. What is the token that is actively powering the DAO? And essentially, CTX is an ERC20 utility and governance token. It plays a role within the Cryptex finance ecosystem where users can vote on network upgrades. They can manage the Cryptex DAO treasury and essentially vote on new and exciting indexes to come to the marketplace. So the total supply of the token is 10 million CTX. The voting quorum to actually pass a vote is about 400,000 CTX. And currently, right now, the total CTX delegated is about 1.2 million CTX. So essentially, a huge chunk of the outstanding supply is delegated back to the protocol, where you have protocol delegates and community members who are actively voting on what they want to see in terms of growth, in terms of the direction of these indexes. They'll be actively managing these indexes. It'll all be done directly through the governance token. And it's something that we're definitely really proud of. Like, the token is currently live on multiple CEXs. It's live on Coinbase. It's live on Gemini. It's live on Huobi. Obviously, actively always looking to grow and continue growing those relationships. But the goal here is to build everything on chain. The goal is to build it fully decentralized, open source. Anybody can audit the code. Anybody can look at what we're doing and say, what's going on here. And that's always been one of the most important things for us and our team, starting with no VCs. Just full fair launch, no backing of any investors, just loving what we do and just trying to build it out and make it happen. So for Cryptex, it's a super cool moment to be here in Dubai and be able to talk to the world about building decentralized indexes and how they can play a role in the existing DeFi structure. We feel that there's like a huge need for people to provide indexes, especially as more and more users come on chain, We want to be one of the solutions that provides that to users, and we all want it to be powered through on-chain protocol governance. So with that, I thank you so much for the opportunity to speak a little bit today, and yeah, we'll see you soon.